Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, July 22nd, 2012. I've got a lot to talk about this week. I've got some great dividend stock trading ideas, also one bottom fishing trade idea that I think you might find interesting. But we'll kick it off with a discussion of the broad market. We just had some relative chop this week. Not a lot happened. I'm showing you a spider weekly chart. We're starting off. You can see it was a doji. I was just going to say doji. I mean, it was a bullish week after a reversal last week, and we moved up a little bit. Market was able to make a new high here in the SPY. I'm just using the SPY rather than the SPX just to shift things up a little bit. Dow as well made a new high before backing off. It feels to me like the market just got a little bit ahead of itself in this move, so we had a little bit of a back off Friday, but it was relatively mild. You can see on this diamonds chart that one of the things I'm noticing is there's just a whole lot of support below us if you fan these out, right? If you go like this on a weekly, you have the main support line here, and then on the on the dailies you can see these, so, and plus the moving averages. So I'm really not expecting too much. There's people on both sides, with mixed opinions here about what's going on in the market. So it seems like we're just kind of complacent here and relatively bullish. One of the other things I was looking at this week was the fact that not only did the market shrug off a lot of bad news, the economic data was bad, but you can see the dollar index had a really bullish week. It had a bullish reversal candle from the bottom, but at the same time the broad market didn't have a bearish bar. So it seems to be a little bit of a disconnect, which I think is a feather in the cap for the bulls. We also have FOMC meeting coming up on August 1st, so that's important. Be aware of that. August 1st, 2:15 p.m. is going to be the next Fed announcement. And the reason I mention that now in context of what I'm saying is that it also ties in with the complacency that we've been seeing here, meaning that I don't think the market wants to sell off ahead of it. It just seems like the market is waiting, obviously for a possible next round of stimulus, whatever the case. So just something to keep in mind. We have Fed next Wednesday, and we also have Apple reporting earnings on the Tuesday the 24th. All right, and Apple's just kind of in a consolidation mode. And again, I mentioned that also in context of the broad market because it could act like a bellwether depending on how the results go. Stock's obviously going to gap up or down. People kind of look to that as like sort of a measure of direction, possibly, for lack of a better word, of what the broad market is going to do. Certainly, it's going to definitely have a big effect on the NASDAQ. All right, sectors. Serious tug of war going on between weakness in financials, right? You can see how the XLF is kind of rolled over. However, it does look like there's some trend line support here, so it's kind of in a do or die. And the fact that the energy stocks have really been much stronger. Like, look at the bullish candle in the oil services, which just broke out, right? And also the XOI just sitting at the top of the range. So you have, for instance, like broker dealers. Let me see here. Let's start with banks first. BKX, right? You have banks completely rolling over, and XBD broker dealers looking like they're going to push to new lows, right? The earnings release this week from GS and MS was both disappointing on both fronts, right? So you have these financials kind of rolling over, but like I was saying, you have these oil stocks holding up really strong at the highs. So that causes a tug of war in the S&P because financials and energy make up a big part of it. So that's something I'm also looking at in the week to come. Transports, which are important to note, had a very bearish week. However, are kind of still in a very large trading range, while one component of them, which is the railroads, actually these are daily charts, excuse me, so I should show you a weekly chart. Railroads made a new high, and let me go back to the transports on the weekly. And transports there, now you can see the trading range that they're in, although they did have a more bearish week. Okay, so all of this put together really just puts together a lot of relatively mixed signals. I mean, the VIX is relatively low here. We didn't get any sort of a pop in the VIX. Friday was options expiry, so it's to be expected that you had this little bit of a pullback in volatility. At the same time, the market just kind of ground lower. It was interesting if you look on the SPY intraday Friday. I mean, every time it tried to make a new low, it would go lower by like 2 ticks in the ES and then rally back. So it really just feels like it's just letting off some of the pressure of this up move here, but there really wasn't anybody stepping on the gas to the downside. All right, let's talk about some trade ideas. I've been tweeting for a long time about a select number of dividend stocks, mostly these mortgage REITs, which I say that people should have like 5% of their portfolio, and they've recently woken up in a big way and started to really take off. So like ARR, as you know, I've been invested in from a basis of around 690, and I've been talking about adding to the position, and it just took off. And I didn't add any in here. I should have obviously gotten more aggressive in hindsight here as this ascending triangle broke. But in here, I tweeted on Friday that I said I don't think this thing is backing off to the ascending trend line, right, to the area here. So I think I just need to add to the position here. So I bought some more at 742. If we look at the longer term chart here, seems to be it's on an upswing here. This has a 16% dividend yield right now. It's a mortgage REIT, so again, these are not things you want to be overly heavily invested in, but you want to have some of these. Another one that I'm looking at is AGNC, which has caught some support here after either probably an offering of stock. What these guys do is they constantly float new stock in the market, and that's a way for them to raise capital, which they then leverage and invest in mortgage securities. So AGNC seems to be catching a bid in this area. This is you may want to also just draw the channel here. There could be a float down to the lower end of the channel. I'd probably be more interested in there. That's 14.5% dividend yield. I'm not in that one currently. Right now I'm just in ARR, but I have been in AGNC in the past. NLY is another one in this space, November Lima Yankee. That's 13% dividend yield. And you can see also just very, very bullish patterns. It's just holding up really well. DX, Dynex Cap, I like this one. This is 11.4%. What I find interesting on this one is you have very, very specific defined risk here. Right? Look at your triangle here. Plus on the daily bar on Thursday, you had a nice hammer. You have supports all over the place. So now you're starting to break trend to the upside. So if you want to be in here, dividend or no dividend, you can have a stop just under $10 here and be risking 14 cents in terms of per share. Right? But obviously you've got to take the risk you're willing to risk in dollars and divide it by that 14 cents, and that should be your share size. So be very careful. Remember, ShadowTrader always recommends that that risk amount should only be a half of 1%. If you look at our trading in the ShadowTrader Pro Swing Trader newsletter, you'll see that we have a model portfolio there where every long-term trade, I shouldn't really say long-term because we just do swing trading that's like 2 to 5 day hold, but it's always a half of 1% risk of the total account size put in the stock. So you take that half of 1% of your account, whatever that may be. If it's a $100,000 account, it would be $500. $500 divided by the 14 cents tells you exactly how many shares you should have. All right. Looking at some other ones that I'm interested in, that OLP I have traded in the past, which has worked out really well for me. This is One Liberty Properties, less of a yield. It's 6.7%, but it is more of a brick and mortar real estate company. So this is like an actual REIT that has actual property. They don't just invest in mortgages. And the reason it's on my radar now is simply this trend line. Look at how well this trend line has held since the lows. So I'm looking to be actually, and there's also prior highs here at the $19 area. So I'm actually looking to be a buyer probably this week on a float down to $19. That's OLP. I'm also finding Stonemore Partners interesting. Guess what these guys do? Ticker STON. They own and operate cemeteries. And with the rate of, baby boomers demographically aging, dying, obviously that's happening to all of us, but there's seems to be, this sort of tsunami shift is coming where we get this older population. This stock should continue to do well, and this pays a 8.4% dividend even at these pretty inflated levels. You can see the stock is actually pretty high here. I'd probably be looking for pullback to trend line. Same thing. I like to use technicals. This may have been the pullback and may have been missed. I don't know, but we'll see. But I am definitely putting it out there as another one to consider. All right. Last but not least, bottom fishing idea here. I've been looking at the coal sector, which has been nothing but just beaten down. So here's a daily, here's a weekly, and here's a monthly. And it's just going lower and lower and lower. And look at this. We're very close to prior support here. And you can draw this in a couple of ways. You can say it's this line, or it's this line, or maybe it's this line. If it's that line, or maybe it's here where the bodies are, right? Because maybe this is excess. You've already come very close. So coal sector, I think, has a chance to perk up here. And although this is really not typical of me to talk about cheap stocks. As I was looking at all the coal names, one that really stood out a little bit was JRCC. Notice that it's about $2 a share here. And what caught my eye is I'm looking at these lows here, and I can see here this is $1.91. And then this low is $1.87, and then this low is $1.88. So you have this sort of triple bottom here of these lows after moving up a bit and then retracing 100% of the move, and then after retracing 100% of the move, failure to go lower. So usually I would think that this move here would be the death knell, because all these people were made wrong very quickly, stock moved down, and yet didn't go lower. So you had ample opportunity to go lower. So I think there's very defined risk here. Could be long anytime early next week around 215 or so. Stop has to be down here under 187. So let's just say you can put the stop at 185. All right, or looser if you like, whatever. You're talking about 30 to 50 cent risk, I would say, depending on how you put the stop. And it could be a good long-term hold. You know, as long as there's defined risk, that's the most important thing. Here's a monthly chart. You can see the stock is actually, when it was in its heyday, it was much more expensive. One thing also that I found interesting about it is look at your on-balance volume here. Good divergence of the on-balance volume, right? As the stock has moved lower, the OBV bottomed here, went up, but look here, these lows and these lows are equal, and yet the on-balance volume is higher, so it tells you that more people were actually buying the stock when the stock was going up than were selling it, meaning volume increased on the up days and was not as strong on all these down days between here, and hence this reading is now higher rather than lower, even though price is equal. So GRCC, another interesting trade idea as well. Oh, and one more, a couple more actually I forgot to mention in my dividend list. Master limited partnerships of oil and gas. NRP, if you recall, was one that I talked about and tweeted very often, and I ended up selling this at $36, which turned out to be very good. If you remember, I was talking about the stock all in this area in past videos. I was very happy when I actually got out of it at the highs for a really strong profit. But since then, I took it off my radar because I felt the stock was toppy. It turned out to be the right call. And since then, it's just come down, come down, come down. But yet, look at where it's coming down to. There's possible support here again. So I'd be very interested. I'm going to be watching this closely, and I think I will be getting back into NRP at some point here in the future as it's coming in. And this is, let me see here, what is the dividend yield here of NRP? That is 10.5% at these levels. All right. Also, one other one in the same space is BBEP. This is Brightburn Energy Partners, and this one is 10% yield as well. And what I find interesting on this one is look at this, what's going on. You have this area here. I think we could easily move to this area. And longer term chart feels like the stock really wants to fly here. On the daily, you've clearly taken out some resistance areas here. Stock hasn't put in a down day in a while, so a pullback would be necessary. I would think pullback to the prior breakout level would be probably a buy point here, and that may tie in with an ascending trend line as well. All right, so BBEP is another one that's on my radar. All right, so that's it. A lot of strong ideas here for you guys. Just to recap, I think the market is kind of pausing a bit here. We've got a Fed coming up on August 1st, shrugging off some very bad economic data last week, which is bullish. VIX is reading in the 16 level, 1627, so showing a lot of complacency here, I would think. So I think there's chance that the market wants to continue higher this week. If not, probably catches itself, or I should say just gets stuck in the soup here of past supports here to the left. And that's it. We'll just play it by ear and see how it goes. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.